And good afternoon, Excellencies, distinguished guests, ladies and gentlemen. On behalf of the organizers, I warmly welcome you to this very important side event of the United Nations General Assembly under the theme Reconfiguring Global Credit Rating Practices, African Perspectives on Reforming the Financial Architecture. I'm Jennifer Zabasaja. I'm an anchor for Bloomberg Television based in Johannesburg. Now, as many of you probably know, today's conversation is about way more than credit ratings, although that is top of mind for many of us. It is the focus to discuss the rising cost of financing for a number of sovereigns across the continent of Africa, and of course, the role that ratings play in this equation and the urgent need to address this and to reform and reframe the way African economies are perceived risky by several investors and many of them within the global financial system. We are very honored, as you can see here, to have an esteemed lineup of leaders, policymakers, and experts who will guide us through a very timely reflection on how Africa can shape reforms in global credit ratings practices while advancing the establishment of the African Credit Rating Agency, which is coming very soon. Before we get started, we just want to make sure that everyone is engaged. This is an important topic, clearly, to many of us. As we can see, the whole room is engaged and quiet and listening to me. So I really appreciate that. But I will stop talking and turn now to Dr. Dauda Sembene, Chief Executive Officer of AfriCatalyst, to welcome us to the session. Please welcome him.
Thank you. Thank you very much, Jennifer. Excellencies, esteemed guests, colleagues, partners, good afternoon, everyone. It's a pleasure to have you all today with us. I would like, on behalf of the co-host of this event, to welcome you warmly and to very much appreciate you being here with us. We are today honored to be in front of you to discuss a very important issue. And I will tell you quickly why this issue matters and tell you also why actually we are here. I think this event on reconfiguring the global credit rating practices and having African perspective on reforming the global financial architecture is a very timely event. It matters because this is an issue that over and over again, Africa has been calling for the reform of the global financial architecture. This is an issue that many head of states on the continent, many leaders on the continent, many institutions on the continent have been calling for, especially given the fact that they feel like the global financial architecture needs to be fair, more inclusive, and it should not leave any country behind. So this event is important because it is very much a continuation of this journey that Africa has embarked on, trying to call for a fairer and more inclusive global financial architecture. This is a continuation of a previous discussion, the latest having taken place on the sideline of the TICAD summit a couple of weeks ago in Yokohama. Where the many organizations here and of course many African leaders have been making a call for this reform. Even actually just before this event on this very room, AU sponsor event also was making case for this need for the global financial architecture reform. And these reforms are urgent. Why? Because when we talked about Africa, we are talking about countries that are facing very high borrowing costs for several reasons. But one of the factors or one of the cause of these high borrowing costs is the fact that there has been an exaggerated perception of risk across the continent. And I think one factor that play into that is the fact that the way risk is priced in Africa is not always done in an objective manner. And of course, when you talked about pricing of risk, you always have in mind a key actor in the ecosystem, which is global credit rating agencies. So it is very much important that this discussion takes place and this platform serves for hearing about African perspective on this issue and what should be done and how that should be done. And we are here today to discuss about that because we have to keep in mind that when we talked about the reforms of the global financial architecture and global co- uh, credit rating agencies, we are not only talking about technicalities. We are talking about issues that have bearing on the living condition of African population, because every dollar that an African countries allocate to debt service in an undue manner is a dollar that could have been that is diverted away from other priorities, including making sure that we do have enough hospital, we do have enough school, we do also have enough basic infrastructure. So it is critical that credit rating issues are not just looked at from the prism of technicality, but also most importantly on how their human sort of impact could be, of course, improved. So we are here today to continue that discussion, and I would like, without taking too much time, to very much remind what many of the co-hosts of this event have been doing so far. Of course, as you know, the African Union through APRM has been at the forefront. They have been doing a commendable job in making sure that they push this initiative, and we are delighted to have this event in collaboration with APRM. But of course, we do also have other organizations like UNDP that has been, of course, very much doing a lot of great job in pushing for this conversation. The UNDP was one of the first organizations that 2 years ago came up with a very influential paper that also very much gave us an idea of how much, due to subjectivity in credit rating agencies, African countries are paying in terms of extra debt service. So definitely it's always a pleasure to have this opportunity to collaborate with this esteemed UN agency, including as part of the Africa Credit Rating Initiative. And of course, last but not least, we cannot forget the commendable work that UNECA has been doing in this area, taking for many years actually through their advisory work, through their advocacy, but also through the convening power that they have been doing. So we are very much delighted, of course, to have the UNECA executive secretary who will be taking the floor very soon. And of course, on behalf of all of those organizations and ASSET and AfriCatalyst, we are delighted to have you with us today. And we are very much looking forward to the discussion that will be taking place today. So without any further ado, I'll stop here. And thanks you again for being with us.
Thank you so much, Dr. Sembene, for setting the tone for the discussion that we are about to have. Now we'll move to our high-level remarks. As you can see, Dr. Sembene is joined by a number of guests next to him. First, I would like to introduce Her Excellency, Mrs. Francisca Belobe, Commissioner for the Economic Development, Tourism, Trade, Industry, and Mining for the African Union Commission, for some high-level remarks.
Thank you very much. I will speak in French. So, however, I will be introducing in English. Thank you so much. His Excellency Claver Gatete, Executive Secretary of United Nations Economic Commission for Africa. Mrs. Auma Asia Konva, please forgive my speaking. UN Assistant Secretary General and UNDP Regional Director for Africa. And of course, Ambassador Marie-Antoinette Roscatre, Chief Executive Officer of the African Peer Review Mechanism. Ladies and gentlemen, all protocol reserved. représentants et partenaires de développement, capitaines d'industrie, distingués invités, mesdames et messieurs. C'est pour moi un honneur et un grand privilège de vous accueillir et de prendre la parole aujourd'hui en ma qualité de commissaire au développement économique, au commerce, au tourisme, à l'industrie et aux ressources minéraux. Je m'appelle Francisca Tachuk Belobe. Je souhaite exprimer ma profonde gratitude au secrétariat continental du mécanisme africain d'évaluation par le père, à la Commission économique des Nations unies pour l'Afrique, la CEA, au Programme des Nations unies pour le développement et à tous les partenaires stratégiques pour leur collaboration dans l'organisation.
In organizing this side event, which is at a turning point, a crucial moment of our financial world. This side event taking place in the sidelines of the US session of the General Assembly of the United Nations shows the strength of collaboration between Africa and its world partners in the quest of significant tools and instruments in the financial world. So our debate will focus on crucial topics, the global practices of credit rating, decision of credit rating agencies, conditioning access of countries to the capital markets, influencing the costs, impacting the route or the trajectory for financing. At the end of the day, this matter is a reality, and over many years, our countries are expressing legitimate concerns on these aspects as we need to bring about a solution that are adapted to our economies. The cycling character of some evaluation of some assessment are rationing the situation instead of alleviating them. The COVID-19 pandemic also has worsened the situation, and many African countries have seen their rating brought down or decreased, knowing, given that the situation in Africa, as the rates have remained lower in our region of the world. For instance, 2020 to 2022, over half of African countries noted or rated have seen degradation despite the sovereignty rate of Africa that remained below 2%, one of the lowest in the world. These adjustments bring about heavy consequences because you have sensitive increase of the cost of employment, reducing available resources to finance health, education, infrastructures. For the whole continent, this might represent several billions of dollars additionally compared to the debt. We have the debt reduction, debt alleviation that we are facing. Africa has not been criticized. We have proposed constructive solution in partnership with APRM, ECA. African Union launched the project of Africa Credit Rating Agency, AFCRA, as I mentioned. This initiative is coming in the willingness of sovereignty, and AFCRA is aiming to balance the perception of African credit rating so as to provide a balance and also help resilience for our economies. This desire also to provide equity. AFCRA So AfriCatalyst is not aiming to compete with existing agencies, but to complement and provide some stronger meaning for Africa. The first analysis are showing that a more equitable approach will reduce the rate of borrowing rate to significant levels. So this shows about $5 billion that will be saved every year. So such economies can have very considerable benefits, and this funding can be reversed in infrastructures and other basic priorities in the countries. So how the Africa is perceived and funded, our economies have shown capacity of resistance to major crises, still maintaining rates that are at least comparable in comparison to other regions in the world. So it is time that this reality to be taken into account. Africa cannot do without this reformation of financial architecture, because this conditioning the framework and possibility of funding our economies. Our message is undoubtedly and without is also unwavering. The fact that the financial system will need to help, need to be a catalyst to development, but not undermine development. The reforming the credit rating practices is not an isolated issue that Africa is facing as a challenge, but it is a global situation that will contribute to edifying a more stable international or global financial system that will be advantageous to all. So it is a matter of allowing those instruments and financial practices globally to align them with our Agenda 2063 so as to reach prosperous Africa that we want. To that effect, African Union is aiming to see the rationalization of this agency in favor of our continent, side by side with our partners. Thank you for your kind attention.
Thank you so much, Your Excellency Francisca Billerbeck, for those continued remarks as we continue our discussion throughout this afternoon. Next, we're honored to hear from Ambassador Claver Gatete, Executive Secretary of the United Nations Economic Commission for Africa, for continued remarks.
Yeah, thank you very much, Moderator. Your Excellency Sidi Tar, President of the African Development Bank Group, I think he was here a few minutes ago. My sister Commissioner for the entire economy, rather than going through the trade and the rest of it. She's the one in charge on behalf of the African Union Commission. My sister Marie Antoinette Rose Catley, the Chief Executive Officer of Africa Peer Review Mechanism. Ms. Ahuna Eziakonwa, UNDP Assistant Administrator and Regional Director for Africa. My brother Daouda Sembene, President of and CEO of AfriCatalyst. Partners, distinguished delegates, ladies and gentlemen. On behalf of the United Nations Economic Commission for Africa, it's my distinct honor to welcome you to this important side event, organized by ECA together with the African Peer Review Mechanism, the African Union, UNDP, AfriCatalyst, and other partners. We are grateful to our co-conveners, to the African Union Commission under the leadership of His Excellency Mahmoud Yusuf, to the Africa Peer Review Mechanism under the stewardship of Ambassador Marie Antoinette, and to all other partners. I also extend my appreciation to Ms. Ahuna Eziakonwa of UNDP, to AfriCatalyst and ASET, and to all distinguished panelists who enrich this vital dialogue. Excellencies, distinguished delegates, we meet at a time when the global financial landscape is under severe strain. As we speak, the world continues to grapple with the aftershocks of the COVID-19 pandemic, the persistence of geopolitical conflicts, and escalating climate crisis. Inflationary pressures and tighter global monetary policies have driven up the cost of capital everywhere. Meanwhile, development aid, once seen as a lifeline, is diminishing both in volume and in political priority. So what does this mean for developing countries, especially Africa? It means debt vulnerabilities are rising and governments are being forced to make difficult choices. Should limited resources be spent on debt service or on education, health, and climate resilient infrastructure? Should governments meet obligations to creditors abroad or invest in the aspirations of their youth at home? Africa embodies this paradox most vividly, especially when the G20 Common Framework is not addressing the debt crisis. Despite some of the lowest default rates on our continent, Africa pays at least 3 times more to borrow than advanced economies. Sadly, this so-called Africa premium is often rooted is not rooted in the facts, but in perception. How can we speak of sustainable development if the price of money itself undermines Africa's future? And how can a continent so rich in potential be made poor by the cost of capital? This is why reforming the global financial architecture is not a matter of charity, but a matter of justice. It is why the establishment of the Africa Credit Rating Agency is not symbolic, but strategic. And it's why Africa's financial destiny must no longer be defined from outside, but shaped from within. Excellencies, distinguished delegates, without question, Africa's financial future cannot be built on shrinking aid flows or cycles of unsustainable borrowing. To unlock the promise of our people and resources, we have no other choice but to pursue a comprehensive agenda that brings together reform, innovation, and resilience. In this light, kindly allow me to highlight 5 priorities for our collective action. First, we must operationalize the Africa Credit Rating Agency with speed and credibility. This is a key pathway to correct the distortions that have for too long exaggerated Africa's borrowing costs. It requires a decisive transition from vision to implementation and must rest on robust governance, long-term financing, and rigorous methodologies. It must also not be seen as a regional alternative, but as a global partner that enriches the credit rating ecosystem with accuracy, transparency, and fairness. Second, we must strengthen domestic resource mobilization while deepening African capital markets. These 2 pillars are indispensable. We must broaden the tax base, leverage digital tools, and tackle illicit financial flows to enable governments to expand fiscal space. At the same time, deep and integrated capital markets will allow African savings to finance African priorities, reduce dependence on foreign currency debt, and foster innovation from green and blue bonds to blended finance. At ECA, we are supporting member states to build this ecosystem, from governance reforms and stock exchange integration to investor education and regulatory capacity. Third, we must build the institutional and technical capacity for countries to reach and sustain investment grade. I'm planning to meet my sister Huna to be discussing how we together can be able to work with African Union in terms of supporting these member countries. Because it's unsustainable, it's unacceptable that out of 54 African nations, only 2 are currently deemed investment grade. This is not a fair reflection of our continent's fundamentals, but of systematic biases that undervalue progress and overstate risk. The result, of course, as mentioned, is that Africa pays more than 3 times more to borrow than advanced economies. Breaking this ceiling requires sound fiscal management, transparent institutions, credible data, and resilient planning. The African Credit Rating Agency can accelerate reforms that move countries closer to investment grade. Mauritius' decision to be the first country rated is a resounding endorsement of this new African institution and must be replicated by others. Fourth, we must scale up innovative financing instruments. How can Africa shield itself from the shocks of tomorrow if it relies only on conventional debt? Local currency bonds, climate contingency clauses, and hedging mechanisms are essential in this regard. They preserve fiscal space, stabilize planning, and ensure that when disasters strike, governments can prioritize their people over their creditors. Cote d'Ivoire's CFA-denominated bond issuance earlier this year, for example, is an important illustration that must be replicated and scaled across the continent. Finally, we must link financial reforms with Africa's structural transformation. Credit ratings will reflect Africa's true potential only when our economies are diversified, our value chains are regionalized, and our youth are equipped to drive innovation, entrepreneurship, and industrialization. Finance must be the engine that accelerates Africa's progress, not the brake that slows it down. Excellencies, distinguished ladies and gentlemen, in conclusion, Africa is not asking for favors. We are demanding fairness. Our credit worthiness must be judged by facts, not by perceptions. In this respect, the establishment of the Africa Credit Rating Agency is not just an African milestone, but a global public good. It will enrich global financial ecosystem by introducing balance where there was distortion and agency where there was exclusion. And the ECA is ever ready to work with member states, the African Union, our partners, and the private sector to mobilize domestic resources, deepen capital markets, and build the capacity needed for Africa to rise to the investment grade and beyond. Together, we can reconfigure global financial architecture so that it reflects Africa's realities, recognizes its immense potential, and equips our people with the tools to prosper. I thank you very much for your kind attention.
Thank you so much, Ambassador Gatete, for again giving us insights into what we should be thinking about during this discussion, and also giving us some tasks and some actionable points that hopefully we'll be able to dig into as we progress throughout this discussion. Let's turn to the heart of this program, a high-level panel discussion. The panel will explore the role of international credit ratings agencies, the distortions they create for African economies, and again, how we've heard over the past few minutes about how AFCRA can potentially contribute to the global architecture, as we just heard from the ambassador there. I'd like to please the guests to the stage and actually allow the guests who are on the stage right now to please escort down to your seat so we can make room for distinguished panelists who are coming up and just introduce them. Speaking of His Excellency CEO, President of the African Sir Vincent, Secretary General of the African Development Bank. We also have Ms. Azua Khan, UNDP Assistant Administrator and Regional Director of Dr. George Sir Yusuf Daya, Director for Innovations for International Cooperation. Please welcome them. Thank you so much. So, you know, we've been hearing quite a bit at this point from our initial remarks from our guests about just how important and historic this moment can be, especially with the operationalizing of the AfCRA. So hopefully over the next 20, 30 minutes or so, we can get into some of that with our guests and to talk and ask questions to our distinguished panelists. But I'd like to start first with the AFDB Professor Vincent. As we have heard over the past few years, how AFDB has been quite about alluding to that. And starting to talk about some of those distortions and the misconceptions that we've heard out there from some of the big three credit ratings agencies, and how you see them affecting cost of capital for African government.
Thank you very much. Let me just say that unfortunately, Dr. Tara had to go to some other event that he was needed. From the perspective of the African Development Bank, of course, you know that we are a development finance institution and therefore work very closely even with the rating agencies because we are also rated by the same agencies. But the problem is that the risk that Africa is perceived by not just the rating agencies, but by even investors is such that we begin to wonder to what extent do they really know of the realities on the ground. BNB is supportive of the rating agency initiative on the continent. It is also very aware that it takes a whole lot to perform this role very well. But Africa deserves a realistic assessment of the risk associated with investing on the continent, or the ability of the African countries to be able to borrow cheaply. So we are very much aware of that, and we are working closely even with the African Peer Review Mechanism through our Chief Economist Complex to be able to assist in whichever way possible, while at the same time the independence and the transparency and the, if you like, the neutrality of the emerging credit agency of the continent to be able to do the job that is required. Thank you.
Mr. Dab, maybe you can weigh in from the perspective of Afrexim Bank, especially given the realities of the past few months for the bank itself.
Yes, thank you very much. And I think at the outset, let me extend the apologies of the President-elect, Dr. George Ilombi. Unfortunately, due to unforeseen circumstances, he did not travel to New York and couldn't join us today. I think the issue on risk perception and negative risk perception that we face in Africa is all too well and maybe a bit too close to home to Afrexim Bank currently. It costs the continent $75 billion in potential government revenue, billions more in inflated borrowing costs, leading to a $200 billion trade and investment financing gap. His Excellency, the Executive Director of UNGA, talked about systemic biases in the system, and we often talk about a risk premium, a negative risk premium. I think we should change the narrative. It is not a negative risk premium, it is a prejudice premium that Africa faces. And this stems from a complete misconception and lack of understanding of the economic realities on the continent. This deters investments, it exacerbates debt burdens, and inhibits development, despite the wealth of resources on the potentials on the continent. The need for the African Credit Rating Agency is therefore more than just creating an alternative to global rating agencies. And when we talk about global rating agencies, we talk about those that are the big ones we usually identify. It is also a counterbalance in the power dynamic that is needed to ensure that Africa has a seat at the table and is able to determine its own agenda. We need the African Credit Rating Agency as an essential tool of establishing a coherent and cohesive continental financial architecture. We have African Development Finance Institutions, Afreximbank, African Development Bank, and we also have a number of other multilateral institutions under the Alliance of African Multilateral Financial Institutions. The African Union is advancing the African financial institutions as well. A credit rating agency that is African will allow us to ensure that these institutions are able to access funds and borrowing based on fair assessments at lower costs that can support African development. When we talk about Afreximbank specifically, well, yes, we've been recently, particularly with the Fitch and Moody's ratings. And I have to thank APRM, Ambassador Yu and Mishak and the team specifically, not only for the response, but how analytical you were in countering the arguments that are put forward by these rating agencies, showing the discrepancy and the subjective biases that are inherent in some of these assessments and methodologies. For instance, we look at more recently, just last month, JCR from Japan took a completely counter view that come from Fitch and Moody's. So it shows that there is some subjective bias, there's systemic biases, and that the counterbalance of an African credit rating agency is critical. Thank you.
Thank you so much for that. And we'll unpack more of that in just a few minutes. I'm hoping you can jump in because we have heard development invoked quite a bit. How do you see these credit rating agencies, and we talk about the big three at this point, widening the gap between developed and developing economies right now?
Yeah, I don't know, Jennifer, how to answer that question. I just, just listening to my brothers here and also to the previous panel, and, our executive secretary from ECA talked about justice and fairness and the inequality that we see in the system. And I think we all know that. And it's troubling for a development agency like ours to see the growing inequality in the world and the role that this credit rating culture plays in even widening that gap. We know that countries in developed nations borrow perhaps at about 2% interest on average, and in Africa is 8 to 12%. And in some cases, even when some African countries have better ratings. So it's not always, you have a bad rating and your interest rate is therefore higher. In some cases, it's just the prejudice that you spoke about means that an African country might even be better off in the rating, but still pay a higher interest rate than. So that is an issue of justice, first of all. But I think when it comes to fairness, if we look at the state of the world today, I mean, I'm a strong believer in justice, and we must continue to fight for justice. But I don't think I am hopeful when it comes to us getting to a fairer world where the deals that are made are actually fair. I think we're moving into an era of transactions. And therefore, when we talk about where Africa sits on this, I don't think we should sit here and talk about, oh, no, we need to keep advocating for a fairer world. I think the burden of proof is actually on the Africa side. We need to, first of all, understand what value we have. Africa's natural capital is grossly undervalued, and Africa tolerates that. Sometimes we reinforce it. And I think that's the beginning for me of change, is when Africa actually deliberately, intentionally invests in first understanding what assets it has, putting value and branding that asset, believing in it, and confidently presenting it, but also combining assets. If we just look at in the mining industry, you look at Simandou in Guinea, and the attempt that 3 countries are making right now to come together on industrialization through the mining assets. I think it's Guinea, Egypt, and one more country. Anybody know? Benin, right? So that you have a stronger bargaining position when you start to fuse the assets of Africa as you go to the world together. So I think there's sort of Africa needs, the burden is on us. We need to really do a lot of homework. You know, I was on a panel yesterday with an investor from Silicon Valley. It was very interesting because we're talking about investment opportunities in Africa, and he's one of the big investors that's responsible for 2 or 3 of our unicorns that developed in Africa. And when asked what he thought Africa needed to do more of to attract more investment from outside, the likes of Silicon Valley, he said, you know, he thinks Africa should really work on having a more unified market, you know, like a one Africa market, because there's a lot of market fragmentation and countries are small. He did not know about AfCFTA.
Mm-hmm.
You know, whose responsibility is that? It's not for him to know that AfCFTA exists. It's for us to take AfCFTA to Silicon Valley and make sure that every single investor of note knows that Africa is already undertaking this journey and that we actually have the largest trading bloc now in the world. So I think I want to come at it from a place of, and here I'm just being self-critical. Yes, we can say that changes have to happen in the, you know, global financial, whatever, we must keep fighting for that. We must get credit rating agencies, the big ones, to line up. But the burden, it's really on us to reposition Africa. The third point I wanted to make is on collaboration among Africa credit rating agencies. We have them, and some of them are quite influential, and they're coming together so that they can provide countries with local currency options is actually quite important. And here, as we look to the future of these Africa credit rating agencies, the challenge will be, how do we leverage what already exists on the ground? Again, looking at local content and Africa's value. Thank you.
I'd love for you to jump in, Professor, as well.
Thank you very much. Okay, when I speak now, I do not speak as representing the president of the FDB.
Oh, come on.
And when I also do not speak as Secretary General of the FDB. I speak as Vincent. Now, the issues raised by Ahona are critical. The question is, it is good to have Africa Credit Rating Agency. What is the technical know-how of our governments to appreciate what is required in meeting the needs or the expectations of our economy being rated properly? That's a question we must ask ourselves. Because even when the rating agencies as they exist come, do we have the enough resources within our systems that will interrogate them and argue from the point of view of Africa's natural capital as part of the computation of Africa's GDP? Do we have those expertise? And at the same time, our government is fiscally responsible enough to stand their ground to say, we disagree with your rating because of A, B, C, and D. So these are issues we must interrogate. So APRM and all the partners, AFDB, ECA, Afreximbank, there must be critical mass of skills within African countries to be able to deal with. Even when we do have our own agencies, it becomes an issue as to, are we able to really absorb all that is required to make us looked at by these agencies as, oh yeah, we got it wrong somewhere. And therefore, we will revise our rating, or we will reconsider a number of aspects of what makes Africa even attractive rather than risky to be able to have access to finance that is cheap. Those are the dilemmas we face. The APRM, some of us were part of the legal instruments of APRM, the way it stood, the way it started. Is it still the same as to what it was at the beginning? Those are questions we need to ask ourselves, and very strong questions. Because we must take, nobody is coming to save Africa. None whatsoever. Whoever is coming for transactions. It's not to save Africa. It has been transactions since the Berlin Conference. And it is transaction today. Is Africa fully equipped to transact? That's the question I leave us.
Do you think at this point, how would you answer that question at this point?
We're not, and we need to.
Okay.
And that's why the partners are here. And it cannot just be a one conference and one side event at UNGA. We must engage our governments.
Mr. Dyer, how would you answer that?
Well, I think, am I speaking as Mr. Dyer? Can I also take off?
Come on.
No, I think, the points that are made are so relevant. We need that local capacity. And I know APRM has been working on building that capacity, on countering some of the narratives that are out there related to some of the negative perceptions that the continent has. There's obviously a need for accountability at the level of governments. There's a need for capacity to be able to engage with rating agencies so that we are putting forward the arguments that we need. I think from my perspective, what is important is a counterbalance to what we have inherited as a system. And I believe the African Credit Rating Agency will provide an opportunity for that counterbalance. And that's why I was particularly happy when the decision was taken that it be a private sector-led and not a sovereign-led or a government-led, so that you remove the element of bias. And what will be critical is once established and once operational, there is a need for clarity on methodology. There is a need for transparency, so that what the African Credit Rating Agency puts out is complementary rather than adversarial to what existing credit rating agencies do. And it lends credibility to that, but it will provide an opportunity for us to consider local context, a better understanding of our economies, of the risks we face, and working with institutions like Afreximbank, AFDB. We have a better understanding of the reality on the ground. We have history of data that can be used to inform some of these methodologies that global credit rating agencies may not have. We have an understanding of the markets, the communities, and the opportunities, and taking into account what colleagues were saying around the issue of the potential of the economy. How can we factor that into some of the work we do to ensure that we bring down borrowing costs? Because everything is transactional. And it's a nature of institutions to take advantage of the opportunity that presents them. We were in the Intra-African Trade Fair just a few weeks ago, and His Excellency, the former president of Nigeria, President Obasanjo, did a fireside chat. And he said, in that fireside chat, he sat with former global leaders talking about the challenges of Africa. And one of the comments that stood out for him was that one of the leaders said, when you look at economic models, humanity is not a factor of production. I will pursue what is to my interest. And similarly, we as Africans should pursue what's in our interest.
Which, Ahuna, you were somewhat alluding to earlier. I wonder, from the UN perspective, are there ways in which you and the institution can potentially help the continent get there and continue to, as you were talking about, focus in on fighting for justice and pushing the narrative forward? What are some of the ways in which the UN is doing that, especially given the SDGs and the goals of the institution?
And I speak as Ahuna and as UN. The two are the same. I believe my views are aligned with my institutional values. One of the ways I think we all, from where we are, have to try to influence this space, first of all. So we have to all, as agencies or institutions, whether it's the financial institutions that support Africa or those of us working on the development side, ask ourselves, what are we doing to contribute to this? And from a UNDP perspective, we asked this question and we knew we needed to bring to the table analytics, first evidence. We need to, really interrogate the space and come up with some data that can power decision making. And that's why we did this report a couple of years ago, which also gave us some insights as to what then the problems are that we can start to tackle. Because sometimes it's quite fuzzy until you dig deeper to see exactly where the issues lie. So that report led to the partnerships that we've created with ECA, with AfriCatalyst and others, to say this isn't a one entity issue, but also a PRM, and our conversations. We all have to come together from the different perspectives that we bring to really see how we can support this. So for us now, we have a program out of this report where we're deploying the best minds on the issue of credit rating to countries on the continent that are getting ready for their rating exercise to build that capacity that you mentioned is missing. And it's quite interesting what's coming out. It's not just that the capacity is not there. In some cases, the attention is not even there in terms of, understanding the weight of this. And so this process, this exercise is now sort of starting to create that awareness, which is important. And, when we come together with ECA, FDP, and others, imagine what we could achieve. So I think part of this conversation has to be also how we build collaborative, how we build a coalition on supporting a PRM, African Union overall, and countries to support, to advance this. And why is credit rating something that preoccupies us? When you look at ECA's report on countries that are going into that fold of middle-income countries, they're increasing. Lower middle income and upper middle income and middle income countries today, I think, add up to about 31 countries. What that means is that these countries no longer can access concessional financing. They have to go to the market for the money that they need to address what is still a pervasive situation of poverty and lack. So when you have to go to the market and it's so expensive, money is so expensive, how can you square, all of these and still be able to achieve the SDGs? So that's why the credit rating thing is important. The cost of capital is really important because more and more countries are going to fall out of the range of access to cheaper capital, right? Yeah, thank you.
Thank you. Do any of you, in your discussions with investors, Ahuna, I know you were talking about an investor from Silicon Valley you were on a panel with yesterday. What indications do you have from the global investor pool about AFCRA and potentially their ability and their willingness to adopt it, considering the big three that they have traditionally stuck by? How's the sentiment among investors? Professor?
Look, can something good ever come out of Africa? That's the question. We have to prove otherwise. So, of course, it's a new thing, and it's coming out of Africa. To what extent can they trust it? I don't even want to bother about what they think at this point in time. What can we do? After we've done what we're supposed to do, it's up to them.
Mr. Dyer?
No, I think Prof has said it accurately. We need to do it. And like I say, if we build it in a strong way with clear methodologies, transparency, they will see the benefit of it to them. And as African institutions, we also have a responsibility to make sure that we are taking the lead in ensuring that ACRA takes its rightful position on the continent and lends that credibility to it. So for instance, an example we often discuss is anybody who wants to take a facility from Afreximbank should possibly go and have an African credit rating to lend credibility to it. This is what Japan did. JCR did the similar thing, where it was the Japan financial institutions who created the credit rating agency, and anyone who wanted to access Japanese money had to get a credit rating from them. And if we use our financial institutions to do that, I think we can build credibility, we can build the institution and ensure that it remains independent, but takes a place in the market.
Thank you for that. We're now going to open up the room to questions for each of these three who are speaking on behalf of their institutions and themselves. So please, if you do have a question, please indicate. Here? Would you like to start us off?
Thank you, my dear sister, and thank you, Runa, and my two brothers, and thank you for all your support that you're extending to the African Union and the APRM and Ambassador Gatete. And thank you for this very, very important discussion and frank and honest discussion about the way forward for the African continent. And two things have to happen at the same time. First is the creation of Africa. It's going to happen. It's going to happen sooner than later. It has to happen. And we've been working extremely hard to make sure that it's operationalized. But at the same time, I think there's the very important issue that's been raised about how prepared are we? How prepared are our member states in terms of being rated? Because AFCRA will not give any member state any favorable rating. It's going to give a fairer rating, a more realistic rating. So APRM, we've been working very closely with the member states, and we have the mandate to do both, to operationalize AFCRA, and then to support the member states in the area of ratings, credit ratings. Now, two statistics have been discussed today, this afternoon. 30 plus countries moving towards lower to middle income bracket. So there is a demand, there will be a demand for more access to credit, domestic or foreign or otherwise. And then 22 member states have never been rated. 22 member states have never been rated. So we have two categories of countries, and we have to work with both at the same time. So when you look at the countries that have never been rated, yes, I think, my dear sister, you're right. We have to work with them collectively and support them. We have serious challenges in terms of technical know-how on the ground today in these member states because they've never been rated. They do need experts. Preparedness for the ratings. How do they prepare themselves for the ratings? The collection of statistics or the existence of credible statistics or the ability to analyze statistics, the legal framework in these member states. How do we develop and strengthen the institutions? Strong institutions, not just to have institutions, not just to tick the boxes, but very strong, responsive institutions. And how do we then establish a culture around economic governance in these countries? So this is a lot of work. And we've been working, and Dr. Mishek and Dr. Bright can give more detail about the work we've been doing, but I feel it's not enough. And we really need this collaborative effort, the UN agencies and our AU institutions, to make sure that we do support these member states as well. I wanted to intervene on that because this is a very, very important discussion that's happening. And we have to be very realistic about our own challenges. it's not just about creating credit rating agency and then being happy about it, but also being very realistic about the challenges that we have on the continent, and what is we've been talking about the African agency. How do we shift? What is a new posture of the continent, and how do we then engage with partners outside the continent? Do we have to? Can we raise capital, domestic capital? Can we raise our own capital? So this is I've heard about this transactional relationship that's emerging now within the global the dynamics of international relations. We need also to understand what kind of relationship we want to have within the continent, amongst ourselves, and with other partners outside the continent. So that's my contribution. I don't know if my team would like to intervene. Dr. Mishek, I think he's a bit shy today. Are you shy, Dr. Mishek? Thank you.
Thank you, Excellency. So just to say, to add a few words to what you have rightly articulated too, I'm learning a lot also from the conversations that are going on here. When I joined the African Union in 2017 to support this program, I thought we had less knowledge from the analyst who does these pronouncements in Africa. But I must say, over time, up to now, I think I would make, together with some of the colleagues I work with, would make much better analysts than many of them who are in S&P and Moody's. I say that because we've produced many analytical products which really challenge the ratings that are put out there. So I'm saying this because the impression that there is no data in Africa, that the governments are not prepared, to some extent, it's not completely correct. Like in the case of AfriCatalyst, which is very recent, they put out the data about non-performing loans, but an analyst from Fitch comes and say, we don't recognize that statistic. We will do our own projection. So that's the area where we need to be bold to challenge such an impression. Because I've seen, after we engage investors who are interested in African instruments on particular areas where there is factual knowledge that needs to be brought to the attention of these investors, it does work to change this impression. And we know that the big three rating agencies do not like that perspective. So in our view, it's important to change the narrative and the impression that the big three rating agencies are superpowers. Because if they were superpowers, they wouldn't be trying to acquire smaller rating agencies that are in Africa. So we do see the merits in the unique perspective that institutions like the AfriCata is going to bring into the market. Thank you, Excellency.
Behind me. Thank you. Hannah.
Thank you very much. Hannah Wanjiya-Ryder from Development Reimagined. It's a pleasure to be here and also to see such a full room and a high-level panel talking about the African Credit Rating Agency. The detractors to me have never really made that much sense, I have to say, because the existence of monopoly and oligopoly in any industry should be a problem. And so the idea of creating a further credit rating agency, especially on our continent, should never be something that we don't support. As an economist, monopoly and oligopoly is never good for the consumer. So that's number one. But I think also the fact is, and I think what's been very useful and important about this discussion is that it's not just the only action, right? There's also around building the capacity of countries to engage. It's also about getting the other credit rating agencies to shift their methodologies and also recognize the other credit rating agencies that exist in other countries too. We've talked, every other region, many other countries have their own credit rating agencies. It's not just the SEMPs and so on. I've talked about China having 52. They have 52 credit rating agencies. But the question I have for the panel is that I think it was some of the remarks mentioned points around this not just being a technical discussion. The technical is important, but the political is important. And also that the African Credit Rating Agency is not just for Africa, it's a global good. And it is good for the world to diversify in every way. And we've seen Japan at TICAD formally recognize the utility of AFCRA. We've also seen China last year doing the same in FOCAC. So I wonder what the panel would suggest for the G20. It is a South African G20 this year. South Africa has said this should be an Africa-focused G20. I myself and Dauda, we also sit on the G20 Africa expert panel alongside other esteemed leaders. What should the G20 be saying about the African Credit Rating Agency? That's my question for the panel. Thank you.
For me, very simply, they should welcome it.
Ahuna?
I think they probably, yes, welcome, but maybe go a little bit beyond that to include this. We don't know the future of the G20 beyond South Africa, but we need to figure out a way, if this is really important and a global public good, to institutionalize some of the ideas here, not just about, an Africa Credit Rating Agency, because this is Africa's decision and Africa's action. Whether the world, endorses it or not, it's not for the G20 to endorse this necessarily. That's not what should validate it, but it's more looking at, what we talked about, the global structures that make it so difficult, even when we have the right agencies and frameworks and actions and political engagement for, progress to be made. So the global issues around how financing works needs to be touched on by the G20. And I know the G20 is trying to drive this. I think the cost of capital has been on the agenda, not fully agreed to by everyone, but we cannot put it out of the table there. There should be support, I think, for data and analysis, recognizing institutional relevance as part of the outcomes as well. Yeah.
Well, I don't know that I want the G20 to say anything about it. Rather, since the African Union is a member of the G20 now, the African Union should place it squarely on the agenda. Thank you.
Is your expectation that will we see any movement on it then at the G20 in South Africa, Professor?
I have absolutely no idea. The African Union should be in a position to articulate it. And, the point remains, I'm not sure that it's the G20 that should say anything about it. Of course, the whole international financial architecture, the need to, revisit it has been there. And the whole idea of making finance accessible to African countries has been there, or low poorer countries, if you like. So the credit rating agency is an institution that will evolve. What the G20 could do, again, through the agency of the African Union, is to support the work that is being done through the provision of resources, expertise to support the work that the APRM is doing, as well as the various partners, to ensure that there's a credible credit rating agency. I'm not sure it will enter their communique at the end of the day, because the way that is done. One country will say, no, we don't want to see it, take it out, and all that. But it's about the African Union being focused on its own initiative, and as a member of the G20, to bring it as part of the discussion, because that way, then you have a seat on the table talking about African issues.
And I think it depends on how you present it. Africa needs to stop asking for permission at these tables. You know, it needs to come with clarity, with purpose, and with commitment and confidence. And I think the rest of the world will follow. Part of our problem is we're always appearing to be asking, will they like it? Will you accept it? What, you know, these should not be on these tables for debate. Africa, if, you know, the AU wants to use a seat at the G20, it is really to articulate with clarity, with commitment, that this is the trajectory that it is following, like it or not. This is where we're going. And yes, welcome to support. Welcome to put it as part of the international financial architecture. But, you know, it's not up to you to decide where we go.
And they will not expel the AU if it does.
Yes, please.
Yeah, thank you very much. My name is Solomon Edun. I'm the Regional Director for International Data Center Authority, looking after Europe and all of Africa. And I've listened to you quite well. While we talk about credit rating, all of that for Africa, we need to consider several factors. Africa is endowed with a huge population of young people who are highly talented. So there's got to be an architecture that will take into consideration, how do you leverage those kind of people? How do you leverage that pool of capabilities? We have endowment of resources, energy, cheap resources that could be properly developed for the enhancement of the entire country. So you're going to have to look at this from an entire ecosystem as against rating just on its own, because you will find out if you don't, as a country, as a continent, digitally transform, leveraging the capabilities and the promise that technology holds today. America is what it is today, not because of ExxonMobil and Shell and Chevron and what have you anymore. It's about the fact that there's a Facebook and Google and co. and the investment in AI today. So my point is, for us to look at the rating as again, say, this is what we've rated ourselves to become, you either take it or leave it. We need to look at it in the light of our rich population. We need to look at it in light of the kind of education our people are having. We need to look at it in terms of energy policy. We need to look at it in terms of governance and all of these things coming together. So when there's a strategic investment to make all of this, it means when we have our rating, there's a solid base for it. And you can't wish that away. We see that in the Western world, they have a problem with young people, but we have an abundance of it. So what are we doing? So we have to bring these things together in a cohesive manner. Unless that is done, there will still be questions around the fact that, hey, I don't agree with the report that AFDB has produced. But when you look at it, you see that, one, if you invest in the people correctly as you ought to from a strategic policy, then you have a good chance to retain that within the continent, to sustain that plan that is developed for the advancement. So these things can be done in isolation. Until we bring all of that together in a cohesive manner, we will find out every time we do this, even if it is done with all good intent and the data can be faulted, you realize that when you look on the flip side, you see that fundamentally on the base, we have a problem. We have young people coming out of the university and technical schools. They don't find jobs. What are you going to do? Underemployed. We have to solve that problem. And to solve it means we have a whole plan that can be developed, which will then open the doors for the right resources to come in. And then when the rating is done, you can then marry it. And so if you're an investor, you want to put your money here, then you have a good voice at the table because we've put some things together that will attract you. As against, you know what, we have the resources, come and take it, tax holidays, free land, and do what you like. For me, ladies and gentlemen, I believe we need to look at this more cohesively. Thank you.
Ambassador.
Yeah, thank you very much. I'm just wondering, because among us who have been rated, because when we started working with IMF, initially they would come from Washington, they have a program, and we started discussing it when they reach in the country. And then that program has a methodology, but they never really initially share it. In Rwanda, we requested for that methodology so that we prepare ourselves. When they did, and you are looking at the productive sector, you are looking at the fiscal, you are looking at the balance of payments, you are looking at the monetary, you are looking at the entire framework, the macro framework, and how it is designed. So we said, okay, give us this methodology. Then we studied it. And then we prepared ourselves. When they came, initially, we could challenge almost everything point by point. Then another time we moved another level and we said, okay, you have a program, we have a program. Which one do we use for discussion? Because this time we had mastered what they are doing and we prepare ourselves much better. But the good thing is they focus more on the economy side, and it comes, you find that you went to the same schools. But when they are discussing your country, you know your country better than them. And that way it is very, very difficult for anyone to challenge you. It reached a point where he says, can we discuss in private? And then you know, at least you are getting to understand each other. Now, for credit rating agencies, it's different. I have been rated by the three of them. And it's totally different because when they come, they show you, they don't disclose the methodology that you use. But then they come and see the Minister of Finance, they see the governor of the central bank, and then few other people who sometimes are not even published. One of them, I had to ask, among other things, you talked about the governance side, you talked about the security side. Did you meet the Minister of Foreign Affairs? No. Did you meet the Minister of Local Government? No. Are you the expert in security and governance? No. But he picked information here and there and then put a situation which is going to give you problems. What methodology do you use so that you could organize as the Minister of Finance a proper setup under which you discuss with all the people concerned? They don't give you the methodology. This is how you do the business. And these are institutions who don't have presence on the ground, like they will have IMF and others. They are not on the ground, meaning that what changes today, what changes next week, next month, they're not aware. They just come with some information they have collected, and then from there they do it. Sometimes they can do something right, but at least it cannot be consistent. You're not on the ground. You are not doing it in a very transparent manner where you sit down and have a discussion and even question or add or provide more information. It's not just the technical, it's you understanding the context of Africa. And that's what we are lacking. And that's why we are saying that this credit rating agency is going to add another value to that and be transparent in terms of this is my methodology that I'm using, that you can cross-check and tell me it is right or it is wrong. And then from there, facts are facts. If I'm bad off, then there are even recommendations on how I can improve. And then next time, you can improve. And when you talk about supporting the countries, it is supporting the countries on getting prepared better. This is what they need to do. This is what they need to improve. And this is how we can move you up the ladder until you reach the investment grade. Today you are B minus, tomorrow you are going to be B plus. With positive outlook, and then you can continue reaching another level where this is the kind of support that we are talking about. The problem is transparency and being open to show you how you are doing this and engaging the country in a more open manner so that you can have a discussion. You don't have to agree with everything they tell you because you can find out the facts, but at least give it a try so that you can have a proper conversation. And then whatever issues, they can give you facts so that at least they get a fair rating. That's what we are looking for. And that's the difference between how the IMF is working and how the credit rating are working, because they meet only very few people. This is clear in every country. And that's what we are trying to change. And when you ask them for the methodology, that's where you get to understand really what is transpiring. Thank you so much.
Thank you so much, especially for sharing your own perspective. Professor, I saw you nodding. I didn't know if you wanted to add anything in there. I think we had a question in the back.
Thank you so much. My name is Peli Sankomo. I'm a development economist from South Africa. I just want to make 2 points, or probably a question. I think the first one is that, I think there's a very clear political consensus around the credit rating. But I think we need to move beyond that, because I think the conversation has matured now, where we can start to talk about what makes the methodology that we intend to use in Africa different. And part of that question is linked to how do we then mobilize African countries, particularly in the in the point that Ms. Auna makes earlier, that certain countries are going to fall off the concessional financing. So it means that there's some bit of a groundwork that needs to be undertaken within the African continent. And how do you mobilize the African countries to actually be able to make it sure that when they apply for financing, in fact, they almost meet all the instruments or the criteria that will actually be set up for them to actually qualify for financing? Because you don't want countries to apply for financing and that declined because the very African credit rating is saying you are actually triple D, right? You've not been able to move to triple B, et cetera, et cetera. So I'm really keen to hear a lot more practical methodological issues beyond just realism of African context.
I think our last point is from the Commissioner.
Thank you so very much for giving me the floor. I'm new into the African Union. I'm not new in the sector. I'm really happy and glad to follow all the comments and so much experience that's been shared with us. I wanted to speak about an aspect that has not been mentioned, which is definitely the structural aspect of our own African financial institutions. We do have a problem with them. We do have a problem with them because in themselves also incorporates biases that in a way slows down or impedes in a way acting African. This is very important. Let's speak about our shareholders. Who are our shareholders? The shareholders of the major African institutions. This is an issue we also need to talk about. We need to reinforce the economy. I do agree that some states might not have a very full understanding, but I will not sign that, because me myself, I have worked in the Ministry of Finance. I'm very glad that my brother brought up the issue, how it works with the Article 4 missions and so on. The states, they are used to be working with international organizations. Now, the issue is we do not have African dedicated organization and institutions as such. We're lucky to be having them. And I believe that one of the ways we could establish in working with this rating agency is giving it a status as I will not say as an advisor, but having a consultative status with the states. It's very important, because we really need to establish relationship between this agency and the state. So it really needs to work. We have to operationalize it. It has to be a consultative it has to have a consultative status with the state, so that the states will feel they will be at ease in working with them. That's the first of thing. Because most of the states, when they go into the market, they do not consult whatsoever noting agencies. The notation comes after. It comes later, when they have already engaged themselves. So I think it's very important to have this said. I think it's also important for us to look at our business, our economies. It's very important. We have to, and this is, I believe that this is where the problem is. How much those African business generates in Africa. I was lucky to participate yesterday in a business meeting where a businessman doing business in Africa was happily speaking about how his business was driven by American first interest. So what are the businesses that are African first interest, and then will engage into investing in our financial institutions and in all other financial structures that we have, such as insurance companies and so on, so that we create a real financial institution, because that's the problem that we have. And of course, we do have the problem of having or establishing a financial and African financial structure, architecture for ourselves. So from my perspective, this is one of the most important points we have to look at. We are not speaking, or we are not talking only about the rating agency. We are talking about establishing African financial architecture that will now, of course, be able to act against or within the international financial architecture that exists already. And last but not least, of course, last for me, I just wanted to respond to the issue of, is this issue of the agency going to be addressed at the G20? As a G20 shepherd, I just wanted to say, we do not have to have the need to address this issue, because for us is one of the instruments towards debt alleviation. So we don't need to discuss it. We just need to implement it and make sure that we operationalize it. So sorry, sometimes I'm thinking in French and speaking in English. So, but that's really what I wanted to say. We just, it's been said, we don't need to legitimize ourselves in having African interest first, and therefore we need African institutions. We have to operationalize it and make sure we have it at the highest international standards. That's what I believe is important. Thank you very much.
Well said, Commissioner. I'd like to turn to the ambassador to give closing remarks for our session today.
Thank you, my dear sister. You know, it's been such an interesting afternoon. I didn't realize we reaching the closing of this. Thank you very much, Excellencies, distinguished delegates, honorable leaders, esteemed partners, ladies and gentlemen. As we conclude this important gathering, I wish to express on behalf of the African Peer Review Mechanism, and indeed on my own behalf, our sincere gratitude for the depth of thought, the diversity of perspectives, and the spirit of collaboration you have all brought to today's dialogue. Our discussions have clearly demonstrated that forming global credit rating practices is not just a technical necessity, it is a moral and developmental imperative. For far too long, Africa has been assessed through frameworks that fail to fully recognize our resilience, our reforms, and our immense potential. These outdated paradigms have contributed to persistent distortions that hinder access to finance, elevate borrowing costs, and constrain the fiscal space available to our governments. Yet, Excellencies, today's conversations have reaffirmed that Africa is no longer content to be a passive observer in this discourse. We are taking ownership of our narrative and driving forward meaningful, homegrown solutions. Chief among these is the establishment of the Africa Credit Rating Agency, AfCRA, a continental institution envisioned to deliver fair, independent, and contextually relevant assessments of African economies. AfCRA is not designed to replace existing global credit rating agencies, but to complement them, offering a credible African voice within a global system that too often overlooks the complexities and unique strengths of our markets. Its role will be transformative. Distinguished guests, the establishment of AfCRA is not just about Africa. It's about contributing to a more balanced, inclusive, and equitable global financial architecture. It's about shaping a system where all countries, regardless of geography, can be elevated based on their true performance and merits. In that spirit, I would like to extend my heartfelt appreciation to our esteemed panelists, development partners, and co-conveners whose steadfast support has made today's dialogue possible. The Afrexim Bank, the FDB, the Open Society Foundation, the United Nations Economic Commission for Africa, the United Nations Development Programme, AfriCatalyst, the Africa Center for Economic Transformation. We are deeply grateful for your partnerships. As the APRM, we reaffirm our commitment to this journey. We stand ready to support the operationalization of AfCRA, to deepen engagement with our member states and to collaborate with all stakeholders in translating our collective vision into real, tangible outcomes for the people of Africa. Excellencies, ladies and gentlemen, as we part ways today, let us carry forward not only a deeper understanding, but also a renewed sense of resolve. This path to reform is not without challenges, but with unity of purpose and unwavering determination, we can reshape the global financial architecture into one that truly serves sustainable development for Africa and for the world. In closing, I'm pleased to make the following key announcements on the operationalization of the African Credit Rating Agency. Following a comprehensive and competitive bidding process administered through an independent transaction advisor, the Republic of Mauritius has been selected as a primary jurisdiction for the registration of AfCRA. We are currently, through the Financial Services Commission of Mauritius, in the process of registering AfCRA and securing a license to issue credit ratings. In parallel, we are assessing additional jurisdictions across Africa that will host AfCRA's regional subsidiaries. By the end of 2025, AfCRA will have an established head office, a robust shareholding base, and a strong management structure, with preparations underway to issue its first ratings in 2026. Finally, we are delighted to announce that AfCRA will be fully operationalized by the second quarter of 2026, during which further milestones will be unveiled. We already have a lineup of countries, sovereigns, sub-sovereigns, and corporates that are ready to be rated. Excellencies, last month, I had the pleasure of briefing the AGE chairperson, and next week, I will also brief the Ministers of Finance and Economic Planning at the 8th Specialized Technical Committee in South Africa on our plans to complete the process towards a full operationalization of AfCRA. Excellencies, it has taken us a decade to reach this stage. Decades of research, discussions, and decisions. We have done our homework. We know what we want. None but ourselves will fix our problems. Excellencies, AfCRA has moved beyond deliberations and is now a tangible reality, an institution born in our lifetime to address the structural challenge of Africa's cost of capital and to affirm our collective role in shaping the continent's financial architecture. Africa is ready. And I wish to extend our deep gratitude to all partners who continue to support this transformative project with special recognition to Afreximbank and OSF for the invaluable contributions. At the APRM, we remain firmly committed to translating the decisions of our principles into concrete action, ensuring that every mandate entrusted to us is delivered with integrity, urgency, and impact. And I thank you.
A very exciting moment. Ambassador, thank you so much for those closing remarks and some very exciting news to come. We're going to leave it there, ladies and gentlemen. Please join me in thanking our panelists, and please, hopefully, we can continue the discussion.